Michael Saylor says he made $15 billion using a strategy tied to AI. But the money isn't even the most shocking part. It's what he says AI is about to do to Bitcoin, and why almost nobody is paying attention. Listen carefully.
I used AI to make $15 billion last year.
Is that a true story?
This is true.
You did?
I did, yeah. And I used an AI to make $15 billion in a way that no one would ever conceive that you could make $15 billion. And,
this is a true story?
Okay, yeah, let's go back to me in 2025. We have a company that has billions of dollars of Bitcoin, $30 billion of Bitcoin. We want to actually raise capital to buy more Bitcoin. We maxed out the equity markets. We became the largest issuer of convertible bonds in the world, and we maxed out the convertible bond market, and that was our journey in the first 5 years of our Bitcoin.
To simplify this for Jenny and Dave, you borrowed as much money as you could from traditional means.
Yes.
Okay.
Yeah.
To buy Bitcoin.
Yeah.
Yeah.
By the beginning of 2025, we had issued as many convertible bonds as you could issue. We were the largest issuer in the world. And it wasn't scalable. So we needed to invent a new type of security, a new type of credit instrument that we could use to borrow money to buy more Bitcoin. So we went to the AI, I went to the AI, and I started exploring, how do I design a preferred stock? And so I said, I think I want to create a security that's not a common equity, and I don't want it to be a bond. I want it to be some hybrid in the middle. A preferred stock, for the layman, it's just a security that could be anything. You can give it any terms. I can sell you a preferred stock and give you the right to put it back to me in 12 months, and it looks like debt. I can give you a guaranteed coupon on it. I can give you conversion rights and make it look like equity. So we used AI to design a convertible preferred stock called STRK. When we did it, no one had ever created a preferred stock that was backed by Bitcoin before, and we'd never issued it. And so it was kind of a combination of financial engineering and digital asset engineering and legal work and securities law. So we built it, and when we asked the lawyers and the bankers, they're like, well, no one's ever done it before. Okay, their answer, by the way, is no one's ever done it before, and people don't do that, so we don't think you should do that. And we're like, well, everything else that people have done, we've maxed out, and so we're kind of at the point where our growth is going to stop unless we find a way out of the box. So we're going to have to do something no one's ever done before using new technology, right? We're using digital capital. We're using digital intelligence, and we're using a digital treasury company. So 3 new forms of something in order to create value. And after we'd done 3 of them, we decided what we wanted to do was create a short duration credit instrument, one that would trade stably around $100, around par. And we were trying to figure out, how do you get a preferred stock to trade at a stable level? It's what you would call technically short duration credit, but it's like we're trying to create a money market type instrument where people can buy it at 100, sell it at 100, collect the yield, and not worry about it trading up and down or being sensitive to interest rates. Well, if you do that, you have to in order to get it to trade stable, if you want the price to be stable, you have to change the dividend rate. And so we created an instrument where we could change the dividend rate every month. Now, had anybody ever done it? No. In the history of the world, no one ever created a variable dividend rate preferred stock. Is it illegal? No. Why has no one ever done it? No one ever had a reason to do it. They never thought to do it. The lawyers, the bankers, the conventional investors are like, well, we've never seen it done before. We're not sure you can do it. We go to the AI, we said, well, can we do it? They're like, of course you can do it. Just do this, this, and this, and this, and that. Well, they said they don't like that. Well, just do this, this, this.
Which AI?
ChatGPT. OpenAI.
So ChatGPT made you $15 billion?
Yeah, because the short of it is we brought that IPO to market. It became a $2.5 billion IPO, the biggest IPO of the year to date. And then we put a shelf registration on it, and we sold another $8 billion of it. So we sold $10.5 billion of that instrument, plus $4 billion of the other instruments. So we basically sold $15 billion of credit, which kind of equates to the company making about $15 billion.
Wow. If Bitcoin's volatility can be turned into $15 billion, it forces a much bigger question. What is Michael Saylor seeing in Bitcoin that the market still hasn't fully understood? because beneath the price swings lies something far more powerful: the ability to transform volatility into digital capital. And when Saylor is asked about gold, his response takes the argument even further. He doesn't simply dismiss gold. He compares the underlying properties of both assets and points toward a fundamental shift from something physical to something digital, scarce, and globally transferable. If Bitcoin can evolve from volatile asset to financial infrastructure, then perhaps its biggest potential is still ahead. Take a listen.
What about this? This is gold.
Yep.
Why not just put all of my money into gold?
It's not an awful idea to buy gold. Gold is up 12% a year for the past 6 years. So whereas the S&P is up 15, gold's up 12, the Nasdaq's up 18, Bitcoin is up 33. Okay, so generally, if you look at the world and you say, where do you want to save your money? You want to buy a capital asset. Gold's a winner, S&P's a winner, diversified tech stocks are a winner, Bitcoin is a winner. Now you're going to say to me, well, so then, why Bitcoin? Well, the answer is, if you're living in Turkey, if you're living in Argentina, if you're living in Brazil before the currency collapses, or Mexico or Venezuela or any country in Africa, you don't get gold, you don't get the S&P, you don't get QQQ. You can't buy diversified real estate in the U.S. Those options I named are Western world conventional capital assets. So the big mistake, don't invest in non-capital assets. Don't put all your family's money in soybeans. Don't buy barrels of crude oil. Don't buy cotton. Don't invest in things that a factory or a robot or an AI can generate infinite of. You buy things that the robots and the AIs and the big factories cannot pump out by the million gallons. And so what is that? It is maybe an ounce of gold. It is a share in the 500 most desirable companies in the world. It is 1 out of 21 million Bitcoin. All of those things are things that the robots are not going to create infinite of. Those are capital assets. Which capital asset is a function of where you live and what your mindset is. If you're living in a war zone, my advice is Bitcoin, because you're not carrying this through a checkpoint, right? If you need to go through an airport, you want something that you get to keep and take with you.
Michael Saylor's thesis is strikingly simple, yet incredibly powerful. Bitcoin is for everybody, forever. And the deeper you look, the more that statement begins to sound less like a slogan and more like a vision for the future of money. He sees Bitcoin as an asset that doesn't belong to a government, a bank, or a particular generation. It can move across borders, operate without permission, and exist independently of the traditional financial system. That changes the question entirely, because if Bitcoin truly becomes a universal form of digital capital, then what we're witnessing today may be only the beginning. And Saylor believes the world is still massively underestimating what comes next.
The real profound breakthrough of Bitcoin is this idea that you can take economic energy, convert it to digital form, and tightly bind it to the person, the family, the company, but the country. We can talk about how we all hate countries, but the history of the world is all the weak countries getting smashed by all the big countries. So if what you're interested in is empowerment and fairness and equity for the small company, the small family, the small person, the small country, the weak, how do you do it? Well, you basically encrypt the money, put it in cyberspace, protect it with a private key. It's like now you can actually own something and someone more powerful than you can't take it away from you.
There's two types of money there in front of you. There's dollar bills, and then I've got a couple of Bitcoin on the table. What do you mean they can't take Bitcoin from you?
Okay, so this is a stack of currency. You walk through an airport on this, they ask you if you have cash. If you do, they just take it. Cash in a physical form is a problem. So what do? You put it in a bank. Well, the bank is a counterparty. So the bank then decides whether you get to keep it and whether you get it back. You go to the bank and you ask for it back. They might ask you why you asked for it back. If you ask for that much back, they file a form with the Treasury Department. If you ask for too much money back too soon, right, someone comes knocking on your door. So the challenge with this is fiat currency. And you hold this at the pleasure of the nation state. And by the way, not just your nation state. It's like every country on earth gets to decide whether you get to spend this stuff, right? Which is interesting. And if you want to actually transfer money to someone in another country, you need the permission of your bank, another bank, the central bank of their country, the correspondent bank. There might be 7 different banks that have to decide whether the money gets from here to there. So this is permissioned money, that's managed by the state. And with Bitcoin, I can take $1 million. I can actually encrypt it in a chip in a physical coin, the Cascacious coin. And that's $1 million. I slide it across and it's literally a bearer asset, and so that's one manifestation of it. But you could also put it into information form. I could transfer this to you just in the form of a private key that I wrote on a piece of paper and I gave to you.
A series of letters you could give me.
Yeah, or I could send you a message. I could send a text message. So good luck getting $1 million of gold from here to London if people don't want you to move it. But I could move $1 million of Bitcoin from here to anywhere in a few seconds. The idea was, I don't want to trust Apple or Google or Morgan Bank or a central bank or a government, right? And so in the extreme case, 2 people can meet in Africa and I can trade you some Bitcoin for your truck. And I don't need the permission of 7 banks and 16 governments and 32 other bureaucrats in order to buy that truck.